Hi, this is Chuck Carnevale. With this video, I'm going to take a look at VF Corporation from the dividend growth investor's perspective. I'm going to start out by looking at VF Corporation's operating earnings history to see what I can learn about the company and how well it's been managed historically and how strong its performance has been. A couple of things strike me as I look at this data going back to 1998. First thing I see is I see a period here from 1998 coming into the recession of 2001 where earnings growth had faltered. It actually had 3 years of negative earnings growth here. And then once we came out of the recession, the company responded with pretty attractive earnings growth going forward. Then the recession, we saw another year of negative growth. And then coming out of the Great Recession, we saw several years of really strong growth. And then I really want to focus your attention on what happened in 2016 and what's expected to happen in 2017 going forward. We've had 2015 and 2016 were 2 flat years of earnings. This is going to be very important in my discussion a little bit later. But the point I want to make is that this is a very consistently profitable company. It does have little periods of what I would call very mild or moderate cyclicality where earnings growth falters for a short period of time. But over the long run, this company has grown earnings at a rate of 8.2% a year, and it's been very, very consistent. But as I mentioned in the introduction here, this is primarily a dividend growth stock, and I'm looking at it from the perspective of the dividend growth investor. So next, what I'd like to do is plot dividends as a portion of the company's total earnings here, or the dividends and then the dividend payout ratio, which is this area below the white line. This company has paid consecutive dividends for 44 straight years, or excuse me, it's increased its dividend for 44 consecutive years. But I also want you to notice something else that I find kind of attractive. You'll notice that from 1998 to 2005, the company's dividend payout ratio was relatively consistent, but they actually increased their payout ratio in recent years. So from a dividend investor's point of view, the dividend record is significantly more consistent and more attractive than even their excellent operating results over time. However, before I go on, I would like to use the scroll feature here and go back in time to fiscal year end 2014. And at this point, I would like to add monthly closing stock prices to the graph because there's a couple of interesting things here that came to my attention. The first is I want you to notice how stock price correlated very closely with the orange operating earnings growth line, or what I call valuation reference. There were periods of undervaluation and overvaluation, but over time, the stock price tracked earnings very closely until we started out in the beginning of 2013. And 2013 and 2014 brought excessive valuations. This orange line is a PE ratio of 15, and you'll notice the PE ratio for VF Corporation had gotten into the 20s, even the mid-20s through 2013 and 14. This was an obvious disconnect from historical norms. And the point that I want to make here is that although I still liked VF Corporation as much as I ever did, during these 2 years, I would not be interested in even conducting any further research because the valuation simply made no sense. I want to also add the year-end dividend yield overlay here to make another point. This is inversely related to valuation. In other words, when the dividend yield is highest, as it was here in December of 2008, corresponds when periods where valuation was lowest. And now we see a period of time where in 2013 and 14, the company's dividend yield was about 1.5% or half what it is today. But the key is it was the overvaluation that really brought the dividend yield down to a point where it wasn't attractive during that period of time. But then what's interesting is I'm going to add 1 year at a time here. I'm going to go up to 2015. And what I want you to notice is we had a flat year of earnings growth here. Now, there's a couple of interesting things about this. this is still the second most profitable year the company had over this entire time frame that I'm looking at here. So it was still a very profitable enterprise, but earnings growth was literally flat for this year. They had 0% growth. And of course, we saw the stock price begin to react. In my opinion, when you see overvaluation like this, the stock is very vulnerable, as I've said often, to even any hint of bad news. As I carry this further into year-end 2016, or last year, we saw more of the same. This stock price has continued to drop as it moves towards a fair valuation reference, as we saw there. And then as I kind of bring it current, the thing that I'm also liking here is consensus estimates are assuming 9% growth going into 2017. And that would be ultimately what I'd be focused on once I get comfortable with valuation here. But I don't consider this stock attractive at this level. But obviously, it's gone from being ridiculously overvalued in spite of good operating results to moving into fair valuation with a little bit of stress on earnings, although it was still, as I already said, an extremely profitable enterprise at that point. So in other words, valuation is coming our way, but I don't really believe it's there yet. I'm pretty disciplined with valuation. I would like to see the stock below 50 before I become really attracted to it, but it's becoming attractive enough to currently gain my interest. But I'm going to take price off of the graph again, and what I now would like to look at is focus on the sustainability of the dividend. So I'm going to start with operating cash flow and take a look at VF Corporation from the perspective of operating cash flow instead of earnings. And what I see here is that operating cash flow is significantly high enough to continue to support the dividend going forward. By the way, this drop in cash flow in 2015 can be attributed to a couple of things that the company reported in their annual report. For one thing, they made a $250 million discretionary contribution to their U.S. qualified pension plan. They also had an increase in net cash usage from working capital changes due to higher inventory levels at the end of 2015. And then they had lower cash collections in 2015, according to their annual report, due to the extra week they had in 2014. So all of that led to a drop in cash flow. I'm going to now move on to free cash flow, which to me is really the acid test when I'm looking at dividend coverage. And we'll see a very similar picture as we did with operating cash flow. But the real point is, even when you look at it from a standpoint of free cash flow, VF Corporation has plenty of cash to sustain and continue to raise and grow their dividend going forward. Next, I'm going to take a look at EBITDA, or earnings before income taxes, depreciation, and amortization, which many view as a proxy for a company's cash flow. And when you look at the company's EBITDA, it's a little more benign than what we saw with the pure cash flow numbers. But what's interesting is I'm now going to add stock price to the equation. And just like we saw with operating earnings, we see this very strong correlation between the company's EBITDA and its valuation. This company has historically traded at a normal price to EBITDA of about 8. Now, EBITDA is a little dangerous also because it's also a function of valuation. If I shorten this graph to a 6-year graph, the stock actually looks undervalued on an EBITDA. But I want you to notice that because of the high valuation, the calculation of the EBITDA multiple has risen to 11.8. So when I'm looking at EBITDA, I like to look at these longer term graphs to try to get a perspective of how the market, or what multiple to EBITDA the market has historically applied. And my own perspective is the company remains moderately overvalued in spite of this large drop in price over the last couple of years. But it's beginning to look attractive, and it's looking attractive enough that I'm paying attention and actually starting to do a little research. I'm going to start digging a little deeper into this company at this point and prepare myself for the possibility that I might consider investing in it. I believe that valuation is critically important. As I mentioned in the written part of this presentation, when you buy at a better valuation, you can purchase more shares, you get a higher current dividend yield, and then in the long run, you're going to end up making more income and a better total return in addition to a better growing dividend income. So I like VF Corporation, but I'd like to see it a little cheaper. This has been Chuck Carnevale saying thanks for listening.